Hi, this is a weekly recap for the week ending Friday the 25th. This is a new thing. I am going now to record and post my weekly recaps in Market Outlook on the Monday morning so that I can also use that information of a possible weekend gap. And also it allows me to take some much needed time off on the weekends. Right, so let's start. Also, I said last week I would make some announcement about some changes to the service. Those changes been discussed with Tom require some coding on his part, and he's been busy with relocating and everything. So this is delayed. The announcement is not changing much for you, um, but basically what I'm going to say is that I'm going to be teaming up with a guy from America. More details probably next week as soon as I manage to touch base with Tom. Okay, so let's start. We've had that crazy bull run bumping on 2675. This area, 2650, 2675, has been a resistance that was visible for some time. That said, when we have so much momentum, one wonders where it's going to stop. Now we've had some conflicting signals, which is quite normal considering that profit taking is long overdue. At the same time, it is not clear whether we'll get it or not. Signals are always stronger when the histogram here, the power of the signal is highest. It's kind of a correlation of the Boolean signal, true or false, with some strength. Also, the signals need to be confirmed by some moving average. So that one was very strong. It was pretty clear. And this one is not very clear, and the power of the signal is diminishing slowly. This doesn't mean that it will be a false signal. I mean, here it was actually a good signal. Here it was not so much of a good signal, but still okay. Basically now what we are waiting for is for that indicator here to turn red, and then we may have the market testing 2600 again. Realistically, this is only a resilience level considering the huge bull run we've had since this Christmas. A reversal would take a retracement much deeper to the 2550 or even to the 2500 area. So also, as you can see, we've got a trend line of highs. So this is a good time for at least some congestion, bullish or neutral, unless of course with earnings coming, especially those big techs like Apple and Amazon, and also the entrenched volatility that is not quite paying off because historical volatility is still higher than implied volatility. But overall, the market could break on either side with probably more chance of going into slightly bearish congestion. In terms of volatility, the VIX term structure is basically flat. It looks quite wavy, but overall it's still hovering around 19. So no indication. The VIX is never a directional indicator. Although we could have expected after a bull run that we would be back into contango. So the nervousness and uncertainty is still underlying this market. Right, not much more to say right now, so the next video will be private and will be on the positions as such.